Today, Disney tells us just how much it's been hurting since the pandemic started. Also, the outbreak forces social media influencers to shift focus. And Elon Musk makes a baby, plus one heck of a payday. I'm Mackenzie Sagalos, and this is CNBC After Hours, Work From Home edition. Let's take a look at the scoreboard. Stocks rallied for the second day in a row. The Nasdaq, a very tech-heavy index, is now under 2% away from erasing all of its 2020 losses. And we're still in the thick of earnings season. This afternoon's biggest report, Disney. Investors and analysts were waiting anxiously for weeks for these numbers. The media powerhouse has taken hit after hit from COVID-19, with live sports canceled and film production at a standstill. And in today's earnings release, Disney reported a staggering 58% drop in operating income from its hardest hit business segment, parks and cruises. And now for three of today's biggest developments in the global coronavirus pandemic. First, pharmaceutical giant Pfizer has begun human testing in the U.S. for an experimental COVID-19 vaccine, becoming the biggest company yet to jump into this vaccine race. Now, Pfizer has partnered with German firm BioNTech to test 4 different possible vaccines to see which one works best. And if all goes well, Pfizer says it will be able to manufacture millions of doses in 2020 and hundreds of millions of doses in 2021. Now, these are absolutely unprecedented timeline projections for vaccine creation. For context, the fastest vaccine ever approved was for the mumps, and that took 4 years. And second, a senior Amazon engineer has quit in dramatic fashion. Tim Bray, an Amazon Web Services, or AWS vice president, wrote an explosive blog post saying he quit working for the tech behemoth on Friday and that he, quote, snapped when the company fired 2 employees who were outspoken critics of Amazon's climate stance and treatment of warehouse workers. Now, aside from those specific employees, Amazon has fired multiple warehouse workers who criticized working conditions at the facilities during the outbreak. In his blog, Bray wrote that remaining an Amazon VP would have meant, in effect, signing off on actions I despised. So I resigned. In a statement, an Amazon spokesperson said it supports workers' rights to protest, but that does not come with, quote, blanket immunity against bad actions. Finally, the latest on the effort to reopen America. Starbucks plans to open 85% of its USA stores by the end of the week, although service will be limited to pickup, delivery, and drive-through. And California will begin to reopen some businesses like florists, clothing retailers, and bookstores this Friday, but only if certain criteria is met. Governor Gavin Newsom said he will release guidance on that specific criteria on Thursday. He also said the state would allow some counties to relax social distancing rules even further if they prove they have the capacity to introduce proper sanitation practices and provide adequate testing and training. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves today.
Airbnb is laying off nearly 1,900 employees. That accounts for about 25% of its workforce.
Yesterday, United told all of its management and administrative employees, about 11,000 in the entire company, that at least 30% of those jobs will be eliminated starting October 1st.
We're going to be in a bear market territory in a trading range probably for easily a good 9 months. I don't think we're going to see a return of a bull market anytime soon. We're far from out of the woods on this one.
I think the reality is that we can predict that cases are going to go up over the course of May. There's really nothing that's going to bring them down. As we start to reopen the economy and restart activity, people are traveling more. You saw airline travel up on Friday, the most it's been in 30 days. You've got to expect cases are going to go up and hospitalizations are going to go up. We don't know how much, but they're not going to go down.
And in partnership with Attorney General Shapiro today, we are expanding our financial assistance program. So, as mentioned, making sure that the top drivers who are most active on our platform that have primary childcare responsibilities would get financial support, making sure that all Dashers, including new Dashers who are joining in record numbers, would be able to get access to sick leave, making sure that all Dashers would be given access to telemedicine.
The coronavirus outbreak has ripped through the entire American economy, causing almost every industry to rethink the way it does business. And social media influencers are not immune. Lockdown measures, including travel restrictions and social distancing rules, have taken a toll on the standard playbook for the influencer marketing industry. As corporate America pulls back on advertising spending, influencers have been forced to adapt to their new reality. Part of that strategy, following the consumers, and they're flocking to TikTok. The app, famous for the viral short-form videos its users create, has been on a growth spurt for several months. CNBC Makeit's Jade Scipione has all the details on the new landscape for the influencer economy.
As the pandemic enters its third month, a lot of social media influencers I spoke to say the ad dollars are shifting towards TikTok amid the pandemic. Just last month, the app, which was only released in the US in 2017 by Chinese internet giant ByteDance, added more than 12 million visitors in the US alone. That's up nearly 50% since January, according to ComScore. Consumer spending habits are also increasing on TikTok, rising to nearly $500 million worldwide. That's up from $175 million just 5 months ago. TikTok star Sarati Callahan, who has more than 7.8 million followers, says she really hasn't taken a financial hit since the lockdown. She's only lost out on one brand deal. While paid posts vary depending on how many followers you have, Callahan says she makes anywhere between $7,000 to $15,000 a post. The money is so good that Kels Washington, who has more than 2.2 million followers on TikTok, says he has essentially put his Instagram account on hold and is focusing solely on TikTok. However, despite the uptick in numbers, Washington says deals have slowed for him on all his platforms. But there are some influencers who haven't jumped to TikTok just yet. Jennifer Rosano, a mother of two and a health and wellness influencer on Instagram with close to 500,000 followers, says she's beginning to see a shift towards TikTok as well, but she doesn't have time to navigate a new platform. The mother of two is currently homeschooling her two young children while her husband works as a first responder. Rosano, too, has seen Instagram slow since the pandemic. She says springtime is prime time for partnership deals, but she hasn't gotten as many as years past. Even as partnership deals have gone down, the good news is engagement is up. And many of the social media influencers I spoke to say they are getting more traction than ever before, as more Americans have plenty of free time on their hands. The only problem is there's more competition, as new users are hoping to be influencers themselves.
Before we leave, it's time for today's numbers round. Let's kick it off with 18. 18% of Wendy's restaurants are running out of burgers, according to one Wall Street analyst. The coronavirus outbreak has wreaked havoc on the U.S. food supply chain, and meat has been particularly hard hit. Many meat processors have temporarily closed after staffers got sick, causing a national meat shortage. And Wendy's has become the latest victim due to the chain's fresh, never frozen beef pledge. Next, $700 million. Elon Musk has appeared to qualify for a $700 million payday. Tesla shares closed up more than 8% yesterday, valuing the company at $141 billion, and more importantly, a 6-month value of $100 billion. Now, Musk's compensation deal has a section that rewards him for hitting exactly this average level. According to the package, Musk is entitled to 12 batches of stock, and based on the current share price, this first batch would net him about $700 million. And of course, we can't mention Elon without congratulating him on the birth of his new son, whose name is, well, I don't know how to pronounce it. And finally, $3 billion. Former WeWork CEO Adam Neumann has sued Japanese investment conglomerate SoftBank for pulling out of a deal to buy $3 billion worth of shares from the startup's shareholders. Now, the deal was part of the $9 billion rescue package that SoftBank and WeWork agreed to back in October, after the office-sharing company's spectacular and embarrassing failed IPO. That's it for After Hours. Stay up to date in real time with CNBC. Get the latest on the earnings numbers from Disney and catch every development in this historic battle against coronavirus and the unprecedented economic fallout by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours. Be sure to catch us then. In the meantime, stay healthy, and we'll see you on Thursday.